we reconsider 2773.
Okay. Do I have a second? Second from Representative Howerton. Do you want to talk about this, or you want me to make a few comments, or?
Yeah, yeah, you can make the comments on
Okay.
it. Yeah.
Yeah, after we passed the bill with the amendment yesterday, leadership explained there was a few problems with that, so they wanted to get that back to committee since we had already moved it out of committee. I did not turn in the committee report this morning. We can make a motion to reconsider, and we'll sit on that and see if we can make some further changes to that. But at this point, if the motion carries, the bill will be back in committee, and we can take that up at another time. If the motion fails, I'll sign the committee report and turn it in. It'll probably just sit there on GO. But any questions, Representative Sanders?
So what was the problem?
The issue on how we handled the alcohol manufacturers, the out-of-state alcohol manufacturers. So. Is there any discussion? Representative Smith?
Could somebody tell me, how did we handle the out-of-state people?
The amendment that we had yesterday basically treated the out-of-state retailers and forced them to go to single-factor sales apportionment. The underlying bill, before we put the amendment on, allowed them to continue using three-factor apportionment. So if you remember yesterday, the discussion was, let's try to treat everybody the same and fair. Perhaps might have had some unintended consequences. Leadership wanted us to take a further look at that before we moved on it. So, Representative Sanders?
So what we're basically saying is we should have listened to Representative Kessler all along.
Okay. Representative Wolf?
Thank you. So what if they're both tier 3? How does that help or hurt our state?
The in-state retailer that we heard testimony from would be forced to remain three-factor.
And that's not good for them?
Single factor would be more beneficial to in-state retailers,
So
yes.
by doing it this way, we're more beneficial for both sides, if we go with 3 and 1?
Well, we're just going to have the motion to reconsider. If it passes, we can continue the debate at a later time. But yeah, we will be able to maybe, I don't know if we'd have another hearing on it. Time's running a little short here, but we can continue to work on that and see if we can find a good compromise.
Thank you, Mr. Chairman.
Okay. Any further discussion, committee? Okay, all in favor of the motion by Representative Hoheisel to reconsider, say aye. Aye. Opposed, no. Motion carries. The bill will, I don't think we have to make a motion to table it. It's just back in committee now, so we can take that up at another time. Okay. Thank you, committee. We will move on to our presentation for the day, and it is my pleasure to welcome Craig Johnson and Diane Yetter. These are a couple of folks that I work with on the Streamlined Sales Tax Governing Board, and they've both cleared their schedules so they could be with us here today to talk about some streamlined issues and sales tax. If you remember, we did have a bill earlier this session, House Bill 2456, where Wichita was considering removing their local sales tax on food. That created or prompted a discussion. The vote has since passed, so we're not having a hearing on that bill, but I still wanted to invite Craig and Diane here to speak with us today so we could understand what some of the complications might be with that. Representative Hoheisel.
Thank you, Mr. Chair. When you say the vote has passed.
Or, the election has concluded.
Okay. Any idea how it turned out?
I've seen some news stories on that, but yeah. But this is a discussion today. They've put together a PowerPoint presentation that will be up on the screen. You do have a PDF in your S drive of the documents. So if you want to follow along either on the screen or on your computer, you can do that. But without further ado, did you have a question?
Thank you, Mr. Chair. I just wondered, and maybe it's in the content of the presentation, are you going to talk about what Streamline is? Because I think a lot of the folks hear that name, but they don't really understand Streamline itself. So before I don't know where their material goes, I just wondered.
Yeah, I think they're going to address that. And by the way, committee, I've got their permission throughout the presentation. If you have a question, rather than holding all of our questions to the end, if we want to just engage in conversation, if you have a question, just get my attention and we can address those questions as we go through. But I'll turn it over to you. Thank you very much for coming.
Let me see if I can get this right. You can hear me now. All right. So thank you, Chairman Smith and members of the House Tax Committee. We appreciate the opportunity to come here and talk a little bit more about streamlined sales tax, what it all means, what it's all about, some of the considerations, some of the things that we hope that you think about as you're looking at legislation as it goes through the session. My name is Craig Johnson. I am the Executive Director of the Streamlined Sales Tax Governing Board. I have served in this role and had the privilege of serving for all of our member states for going on 14 years now. Prior to that, I was with the Wisconsin Department of Revenue for about 24 years. And I was one of Wisconsin's delegates when Wisconsin chose to participate and join Streamline back in 2009. So got a lot of background with it that way, as far as from the state side, from the Department of Revenue side. And now I sit in a very unique position, as you'll hear, I think, as we go throughout the presentation today. Along with all of our member states, one of the most important things we have to remember is our partnership with the business community. And I am really pleased that Diane Yetter was able to make it down here and present alongside me. So you can get not only the state's perspective on it, but also get the business perspective on it. So Diane, you want to introduce yourself?
Thanks, Craig. Thanks, Representative Smith, for inviting me. My name is Diane Yetter, and I am the president of Yetter Consulting Services, and I also am the founder of the Sales Tax Institute. And we provide sales tax consulting and education to business owners, to business workers throughout the world, truthfully. And we do that by participating in Streamlined. I sit on the Business Advisory Council and am also one of the officers. I'm currently the secretary of the Business Advisory Council and really value the relationship that we have with Craig and his team. I am a Kansan, partially, not born here, but moved here in high school. I started my career as an auditor for the state of Kansas, so I was a sales tax auditor. So I definitely am familiar with the Kansas laws and Topeka, lived here, and have family still here in Kansas, so I do come back pretty frequently. So thank you.
Did you make it back for the KU K-State game?
I did not, but I did watch it on TV.
Diane and I have a little KU K-State rivalry going on. There's not much of a rivalry right now, but.
There we go. Okay, so here's the agenda that we're planning to follow. We got a number of topics we want to go through. I was glad to hear that first question is, are you going to talk about what Streamline is to begin with? You know, we've got 8 hours of material here, so we should be done. I think he said we have to be done by midnight or something, end of the day. So we do have a lot of information, though, and we're going to try to cover it, you know, at a very high level. We do have information that you'll be able to take with you. And then we also do have a publication that I'm going to give a plug for right on our website that gives you, and it's really intended for legislators and tax administrators to kind of give you the 30,000-foot level view of what Streamlined is, what it's all about, what the intent was, and the things that we've accomplished. So this will be the agenda, and again, I think all of you have the PowerPoint. Representative Smith, I believe, did send that around to folks. So let's talk about what Streamline is. Some of you probably weren't even around in the legislature at the time Kansas joined Streamline. If you're not aware, Kansas became a full member in Streamline October 1st of 2005. So they've been a member since the very beginning with respect to us. But I would like to ask just one question. How many of you feel like you know or have a pretty good understanding of what Streamline is? And I'm hoping that Representative Smith is going to raise his hand because for those of you that don't know, he is our first vice president this year. He is scheduled to become our president next year, presuming he makes it through our process. So, and I think he'll do a great job. So let's talk about what Streamline is. It's really it's a voluntary, it's a collaborative effort of both the states and the business community as well as the local governments. Early on, the local governments, came forward and said, hey, a lot of what you're doing impacts us. We have sales tax, states have sales tax, and you're asking us to potentially make some changes. So we are very involved also with the local governmental units. Our whole goal really is aimed at making sales tax, and I know you'll like this, making sales tax, less taxing, right? We're trying to make it simpler to administer, not only from the state's perspective, but also from the business community perspective. You know, the easier that we can make it, the better off, I think the better off that we all are. Now, while doing this, and one of the reasons it's so important for us to have legislators involved with Streamline, there was much heavier legislative involvement earlier on when we were trying to write the agreement and saying, okay, here's what all the states are going to have to go back to do to their statutes to become members of Streamline. Now that we've done, I'm going to say, most of the heavy lifting, that's a good thing, and a lot of the legislative activity has, I'm going to say, has waned, and we've done that intentionally. You know, tried not to make states make additional changes with respect to changes that we make. But one of the things that we have to do is we have to know what you as legislators are thinking when we're looking at making revisions to the agreement. We also want to make sure that we do everything that we can to respect your state sovereignty. You know, we recognize that states in effect, are all sovereign. You guys want to decide what's taxable and what's not, and we are not here to tell you what to tax or what not to tax. And I think Representative Smith would agree with me if I said we have never had a meeting where we've said, all right, states, you all have to tax this. In fact, I think we've said just the opposite. It's entirely up to you. That is your right as elected officials. So we do ask you to treat certain transactions the same. For example, if you have a uniform definition and you adopt the definition, you either tax everything within that definition or nothing within that definition. We do create some toggles, and I know Diane will talk probably a little bit about that and some of the complexities that adopting those toggles can create for us. So why did Streamline start to begin with? Well, if you go back and you think about what states were allowed to do or not allowed to do prior to 2018, so not that far back, states could not require any business that did not have a physical presence in your state to collect and remit your sales tax. The reason? 2 U.S. Supreme Court cases, National Bellis Hess case in 1967 and the Quill decision in 1992, basically said what? States, you've made sales tax way too difficult. You can't expect a business halfway across the country to understand what all of your laws require and to be able to properly apply them. So in effect, they said under the Commerce Clause, it imposes undue burdens on interstate commerce. Therefore, if they don't have physical presence, you can't require them to collect. Streamline started, we wanted to change that. We wanted to change that thought process, that mentality. We wanted to remove the undue burdens. And that's really what our goal was. We had the National Conference of State Legislatures, the National Governors Association, Federation of Tax Administrators, Multi-State Tax Commission, all came together and said, we need to make this simpler. Remote commerce and e-commerce is starting to grow. Our states are starting to lose revenue. Our brick and mortar sellers are at a competitive disadvantage because their remote seller counterparts don't have to collect sales tax. And you all say, well, yeah, but you still had to report use tax as a purchaser, right? And we know how well that worked. We know that everybody that bought something online, everybody that bought something through the mail that didn't pay tax, paid that tax when they filed their income tax return. I can tell you again, for the last year that I was in Wisconsin, we had 2.9 million income tax returns filed. Guess how many reported that use tax on out-of-state purchases? Less than 0.1%. And you say, geez, so did you get any money? You know how much money we got out of that? Between $1.5 million and $2 million at 0.1%. Now gross that number up, and you're talking hundreds of millions of dollars that in effect the state is losing. Your in-state businesses are losing to remote competitors because they don't have to collect the tax. And you think back to how advertising was, and it said, buy from us, we don't collect sales tax. And the reason was they didn't legally have to do it. So we wanted to change that. We wanted to find ways to be able to get our remote sellers and our brick and mortar sellers on the same page. So when we talk about the kind of the goals of what Streamline operates under, these are kind of our principles. These have been our principles since the very beginning as far as the things that we are trying to do. Obviously, creating a simpler sales tax system overall. Keeping in mind, you no longer have businesses just within your state. They are selling all over the country. They are literally selling all over the world. I can tell you through Streamline, you've got sellers collecting Kansas tax that are based in a number of foreign countries, because I know they're registered through us, they're registered through Streamline, and they're filing returns in Kansas. Now, there are some things that, quite frankly, you can't make them simpler, but if you can get the states all to come together and try to make them more uniform, that uniformity from a business perspective, and I think Diane will agree with me, that in and of itself is simplification compared to where we were. So that is something that we try to do, if nothing else, make things uniform. And then along with the simplification and the uniformity, again, I mentioned the state sovereignty. That is always in the back, I will tell you, always in the back of my mind as the executive director, and we're debating issues and we're talking about issues, and I'm thinking, what are we doing as far as simplification, uniformity, and how does it impact state sovereignty? The more we make everybody be the same, that's a step away from state sovereignty. The more we let you do whatever you want, that's a step towards increased complexity. So we have to balance that. We have to walk that fine line. And then obviously using technology, and technology has advanced so much over the years, and it's going so fast that we've found a lot of ways that we can use technology to to make the processes even simpler for the businesses. So when we talk about who's involved with the organization, we talk about our states. And when we're talking about states, I'm talking about you as state legislators, our tax administrators. It's extremely important from my perspective for the tax administrators and the state legislators to have a great working relationship. You have a wealth of knowledge and a wealth of experience over at your departments of revenue, and this is throughout the country. And you want to pass certain laws, you have certain things that you're trying to accomplish. They can help you do that, and they can also point out what are some of the complexities if you do these things. We will point out the things from a Streamline perspective, saying, well, under Streamline, all of our member states have agreed to do this, this, or this. And we will just point out whether we agree with the policy, disagree with the policy, that's not our role. That's up to you as legislators. It's up to us to say, is it in compliance with the agreement? And does it follow the compliance? And what we have found is a number of times when we're reviewing bills, we'll find bills that are not in compliance, but we'll talk with the legislator and say, well, what is the intent? What are you trying to do here? And can we find a way to do it within the realm of Streamline? And in many cases, we can do that. There are ways to draft the bills in that manner. So tax administrators, the state legislators, everybody working together, the local governmental units, we've got the national organizations, the U.S. Conference of Mayors, the Government Finance Officers, National League of Cities, National Association of Counties. They are all participants with Streamline. Again, they represent it at the national level. We certainly encourage any of the local levels that have issues, have concerns, to come and talk to us. If there's something that they feel like they can't do or they want to do, and they need us to make some changes. And then obviously the business community, as I mentioned before. And again, this is not only the practitioners like Diane, it's this very large retailer that they used to sell books out of their garage. They participate with us. I think you know who that is. And we've also got some very, very small mom and pops to participate. And from my perspective, the small mom and pops opinions and comments are as important as the large book reseller that were started in their garage. Everybody is on an equal playing field. Everybody's opinions are important when we're talking through these issues and trying to come to resolution and come to agreement on them. Oops, did we pop out of there for a second? There you go. So this is a map of our current member states. All the states that are in that bluish color, those are all our current full member states. So we have 23 full member states, 1 associate member state. So out of the 45 states plus District of Columbia that have a sales tax, we've got over half of them that are participating in Streamline. Now we would love to get the other 40 or the other 22 that have a sales tax to participate along with us, but for varying reasons from different states, it's just something that we have not been able to do. It's just been, I'm going to say, too heavy of a lift. You might notice your neighbor off to the west a little bit, Colorado, they're in a color all by themselves. Colorado has never participated with Streamline. Part of the reason is because of their Tabor laws, because of their home rule requirements. They looked at it and said, there is no way that we'd ever be able to get into compliance with Streamline. Now, to their credit, there are a number of things that they have done or that they are trying to do that are consistent with Streamline, like looking at definitions, looking at central registration systems and things like that. So, but that is where we stand today as far as with our current members.
All right, so now what I want to do is just explain a little bit to you about the burden of sales tax collection from the retailer's point of view. Can I just ask, any of you outside of your legislative life ever run a business? Okay, good number of you. And so when we think about what are those requirements, as Craig said, now that businesses have to collect tax in many situations across the country, I want you to think about what you had to do if you were running a local business, maybe only doing business in your community in Kansas. Explode that out to having to know what all the rules are across the whole state of Kansas, but also across all of the United States. And you can see that that just really exemplifies the importance of the common definitions that Craig talked about and the importance of central administration. So here in the state of Kansas, the State Department of Revenue administers all of the sales and use taxes at all levels, whether it is the state tax, the county, the city, and all of the myriad of special purpose districts that I am grateful did not exist when I was an auditor. So there has been a big proliferation of those, more recently. And so having that central administration, when people ask me, what is the worst state that businesses have to do business with? Colorado is number one in my mind because of what Craig just talked about. The separate administration of local taxes, where not only do you have to separately register and file with each of those different tax authorities, so the city of Denver, you file a separate tax return with the city of Denver. You have to separately register with the city of Denver. In the state of Louisiana, back when I first got into the sales tax field, if you were doing business in the entire state of Louisiana, there was 1,700 tax returns to file just in one state of Louisiana. So they have come a long way. They have simplified it. It's now filed at the county level, and more recently, they now have a centralized filing at the state level. But both of those states are not at all eligible to participate as a full streamlined member because of that complexity. So central administration, central registration, that is done at least at the state level. Now, Streamlined has the ability for all 24 Streamlined member states. I can do one tax registration and get registered with all 24 states. And I can do that by answering 10 questions?
The bare minimum.
Bare minimum. I don't have to disclose. One of the things that we get pushback from taxpayers when I go to register them, I have to put down and get from their officers their birth dates, their home address, their phone number, in some states their driver's license, and their social security numbers. That is not something people are comfortable giving out today. And I have to do that in different states. The state of Pennsylvania's sales tax registration is 15 pages long. The state of Kentucky, which is a streamlined member, their application, I think, is about 22 pages long. So if I have the option of answering 10 questions and getting Kentucky registered at the same time I'm registering Kansas and the rest of the streamlined states, that is a huge benefit. It saves taxpayers money in having to get registered. It also makes it much simpler and less risky in terms of confidential information that they have to give out. So all of those things are very, very important as part of Streamline. Uniform rounding rules. Right now, I know we heard as we were coming in that the penny rounding, that is the big issue here today, but we've had issues with just general rounding rules. You would think that's not a big deal, but there are states that do not follow simple math and round with all kinds of different rules. And so Streamlined, we have a simplified uniform rounding rule. Definitions are a key tenet of what Streamlined is all about. There are certain things that have exemptions across the states that states want to be able to provide exemptions for. Food is one of the most important ones that we see across the states. And when I have been in this, I've been doing sales tax now for almost 40 years. So I've seen a lot and how things have changed. Knowing what is food is really hard. What is a Twix bar? What is a Twix bar? Most people would say it's candy, but it's not. It's a chocolate-covered cookie, okay? So some states, it's sold in the candy aisle, it's thought of as candy, it's taxed as candy. Others say, nope, it's a cookie. Cookies are food. Mini marshmallows versus big marshmallows. One is candy, one is a food ingredient. How about a fruit juice? What % of natural fruit juice do you need before it's food? Multiply that by the 46 states with the sales tax. That's how many different rules somebody had to take care of. So Streamline came in with all of these common definitions. Not everything. We don't have a common definition for what is manufacturing, but things that states want to really exempt that really go down to minutia. So we look for Streamline member states to comply with that. We also look for the same tax base. So what makes Colorado that most hated state? What is taxable or exempt at the state level is not the same at the cities. So the state of Colorado does not tax electronic goods for the most part, but the city of Denver does. If I'm a Kansas retailer selling into Colorado, I look at the taxability matrix for the state, I think I'm fine. But you know what? The city of Denver tax rate is double, more than double the state rate. So if I don't do that right, what happens? I, as the retailer, because I didn't collect the tax, get assessed that tax. So now I'm paying tax that I never collected. So having that common tax base is very important. And then the limited tax rates, that we kind of limit that, although we're not as limited on it, it's just making sure that they're administered by the state. Retailer liability relief, that example that if it's not public, it's not published, it's not easily available to the taxpayers to know what they need to do, that the state is going to give that liability relief. But, as Craig said, state sovereignty. If the state of Kansas wants to exempt candy, it can. It can exempt food, it can exempt soft drink. All of that you've decided to exempt. But you've followed the definition of streamlined and said all of these categories. So Craig mentioned that there's toggles. We have a common definition of food, and then there is a candy, a soft drink, and a bottled water. The states can choose whether to toggle those on or off with their different exemptions. Okay? All right.
I just want to throw in there, because I saw you mouth the word flour, and then everybody's kind of chuckling. I think they've all kind of heard that about the whole candy issue. But keep in mind that when we were developing these definitions, the business community and the states both said, we want objective, bright line definitions. And it wasn't the states that came up with flour. It was the business community saying, how do we differentiate? And working together with the states saying, well, what if we used flour as the toggle? And yeah, you get some strange things like the Twix bar versus the Snicker bar. But anybody, whether they're using a Diane to represent them or they're doing this on their own, it's an objective definition. They can look at a label and they can know, is this or is this not candy? And that was really a kind of a tenet as we were developing the definitions in Streamline.
If I could comment on that, I remember when we were going, and many of you were here, when we were at Kansas and at the level we were setting the state rate to 0, we were trying to define food. If I remember right, I think there was actually a bill, there was lots of them introduced back then, but there was a bill that said, we're going to go to 0 for healthy food. We had no definition for what healthy foods were. So, you know, we used the Streamline as a member of Streamline. We had access to that definition. We didn't have to go through all that work ourselves to try to define what we wanted to tax and what we didn't.
And that's a perfect example. We also saw, as another example I thought I would use to explain some of the complexities, you have a bill pending on the exemption for feminine hygiene products and diapers. And that is a defined term within Streamlined. So we reviewed it, guys did a great job, followed the definition exactly. So all of the items that the streamline defines in feminine hygiene products, you are including. So if you had chosen not to follow that, you of course would be out of compliance with streamlined, and then that comes with a number of different actions that happen. But I wanted to just talk you through what that means to a business. So the food example I gave and this example, if you vary it by just one, and these toggles that we do allow, the toggles are broad enough. So soft drinks, candy, bottled water, those are larger categories. If you get down to minutia and you get down to lower levels of classification, what that requires is a retailer has to look at every SKU, every item that they sell, and then look at it individual by individual to say, is this taxable or is this not taxable? Where it becomes a challenge is to do that item by item. That means a retailer, every time they add a new SKU, they add a new size, they add a new flavor, they have to create a new taxability rule within their selling system. So what we always look for is the ability to create categories. This is food, this is candy, this is feminine hygiene, this is adult diaper, this is children's diaper. The minute we've got differences, and we have this against streamlined states versus non-streamlined states, I now have to go down to much lower levels because you have to go to the lowest common denominator. If there is one state that pulls something out, you have to pull that out for every state. So every time there is a variation that somebody pulls something out, some state pulls something out, I now have just complicated and potentially required a retailer to set up 46 different rules for that same product. So that impacts it if I am doing it at a state level taxation or if I am pulling something out and saying the local is going to be taxed differently than the state. So that is part of those burdens that really come to roost at the retailer when we have these complexities and these differences. All right, so what kind of got us to where we are? And that is the Wayfair decision. So in 2016, the state of South Dakota passed legislation that said that an out-of-state retailer without a substantial physical presence in the state of South Dakota would be required to register and collect their tax if they made more than $100,000 of sales into the state or more than 200 transactions. Now that, after the National Bellis Hess and the Quill decision that Craig talked about earlier, was deemed unconstitutional. This bill was written very specifically to test whether or not the Supreme Court was willing to take on a new case to look at that. So it was fully expected at all of the lower levels that South Dakota would lose and that the taxpayers would win, and that is what happened. The Supreme Court did decide to hear the case, and that hearing was ironically on tax day 2018. I was there, Craig was there. Craig got in for the whole hearing. I was 8 people too late and only got the first 3 minutes of the hearing. So, but it was momentous because this is a once-in-a-lifetime sort of case decision. But what the court did was they did come down and say, you know what, we were wrong. It's not often the Supreme Court does that. We were wrong when we made that decision in National Bellis Hess and Quill. And what the Commerce Clause actually says is substantial presence, not substantial physical presence. So they overturned the limitation that substantial presence was only created through physical presence in a state, and that is where the South Dakota legislation that said $100,000 of sales or 200 transactions. Now, if you have physical presence in a state, those thresholds are not relevant, and even sales below that level, you do have an obligation to have to collect tax as an out-of-state retailer. Oops. Too far. So this is what brought on the requirement for these retailers from not just around the country, but around the world to have to now comply. Now, it's hard for departments of revenue to enforce collection actions against foreign sellers, But I can tell you that foreign sellers are, for the most part, trying to get compliant as long as it is something that is easy to do. I'll give you one example of what makes it really hard for foreign sellers, and I can't remember if Kansas directly has a problem, but Streamlined worked around this. There are states that you must have a U.S. federal identification number in order to register, and your officers must have a U.S. Social Security number. If you do not have that, you cannot register. But if you sell more than the threshold, you're required to collect. You can't collect if you're not registered. So those states have made it impossible for sellers to comply. The more roadblocks you put in place, the less revenue you're going to receive. So you need to kind of keep those things in mind. But what this did is it made all of these sellers outside of your state have to comply with registration, calculating and collecting the tax, understanding how to file those tax returns, and then being subject to audit. Now, I'm sure the Kansas auditors will love to have to go to exotic locations to do an audit. I'm pretty sure that they are not going to be sent there, but today, in today's world, being able to do them remotely. So what the court noted specifically about the South Dakota law were some of the things that were specific to Streamlined and also things that made it less burdensome on sellers. And that is that there was a safe harbor, that $100,000 or 200 transactions. That made it so the smallest sellers were not subject to a registration and collection responsibility. Another tenet of the South Dakota bill was it was not retroactive. So the minute South Dakota filed a lawsuit against the initial retailers, including Wayfair, the ability for South Dakota to enforce that tax was stayed, not just for those 3 retailers, but for anyone. And it was not allowed to be enforced until the decision was deemed valid. And so there was no retroactive application. Now, there were some other states that tried to do it retroactively, and they eventually backed down on that. And then the last thing that the court really noticed in their opinion was that South Dakota was a member of the Streamlined Sales Tax Governing Board and followed the Streamlined Sales Tax Agreement. And that made it so that they had the consistency, the uniformity, the centralized registration, and also the ability to provide some of the benefits for free compliance offered by the states.
So on that, with respect to what the Supreme Court had identified in their opinion, when you go through and you read that, and I believe it's on pages 18, about halfway down, and it goes into page 19, I think it is, not that I've read it a few times, but there's some language in there. They actually go through and they list out a lot of the key features of Streamlined. But then they get to one spot where they say, and other uniform rules. And I think they were just tired of listing out. I mean, you look at that list, it comes right down the things that are in the Streamlined Agreement, what those requirements are. So we were obviously very pleased with the decision of the court, but we also had to tell ourselves they did not rule on whether or not South Dakota's law still imposed undue burdens. They remanded that back to the court, and they said, you need to figure that out. South Dakota and the defendants in the case, they got together and they actually settled. So we do not have an answer on whether or not South Dakota's law is or is not burdensome. But with the Supreme Court taking about a page and a half of their decision and saying, but here's all the things South Dakota did, we think that points very favorably to the activities that Streamlined has undertaken and all of our member states have done, including Kansas. I think that right now, there are, I'll say 23 and a half, because I'm just giving Tennessee a half since they're just an associate member. But I think there are 23 and a half states that I would feel pretty comfortable having somebody come in and challenge them and say they're imposing an undue burden, and I think we'd be successful. I think the things that we have done, the things that Kansas has done, the things that all the member states have done is enough to say we have removed the undue burdens on interstate commerce. Now, 22 other states that are out there that are not members of Streamlined, and with the exception, I will give Pennsylvania kudos, because they did do a number of things similar to what Streamlined did. But the other 22 states that are out there, they have not adopted these key features. I think, in my opinion, they are still potentially at risk. If there's going to be litigation, that's where I would have expected to see it. And we already are seeing it. We're seeing it in Diane's home state of Illinois. There's some cases going on right now that are challenging their remote seller collection authority specifically on the imposition of undue burdens. So I think, again, we're going to be watching those very, very closely. But it's also a reason why, from my perspective, anytime I see our states, I'm going to say, moving away from everything that's required under Streamline, one of the first things I point them to is that Wayfair decision and saying, look, the further you move away from where your laws were at the time Wayfair was decided, the more likely or less likely you may end up being successful if you ever are challenged based on an undue burden argument. So those are things that I think you really need to keep in mind until we get this as settled law. There were some cases that went on earlier in Illinois that they settled. I was really hoping that those would get into the court system because I really would like to have an answer. I would like to know, did our states do enough? Did we not do enough? Did we do way more than we needed to do? And again, even if we are found to have done way more than we needed to do to remove the undue burdens, I think it shows the way that you as legislators and our member states care about trying to help the businesses be able to succeed, remove the burdens, make it easier for your departments of revenue to be able to administer those taxes as well. So Diane touched on a lot of these different requirements that are and features of the agreement. So I'm not gonna hit them again. But again, if there are specific ones, I'm glad to touch on them. I see Representative Smith, you look like you were getting no. Okay. So there are two pages though or two slides of the various key features within the agreement, and these are really the things that the business community looks at and says, these are really important to us. Again, there's a lot more to it, but these are some of the main ones. And one that I do want to point out on here is the one dealing with the simplified exemption administration. And Diane asked if a number of you have run businesses before, and if any of you have made sales across state lines, and if your customers come to you and then they say, hey, don't charge me sales tax because I'm exempt, right? And then you find out they really aren't exempt where you ship that product. Do you want that other state to be able to come back to you and say, you should have collected that tax and you should have known what that other state's law required? That's a key tenet of that simplified exemption administration provision, which says basically, if a purchaser comes to you as a seller and they lie, they give you the information that says, don't charge me tax because I'm exempt, and it's later determined that they don't qualify for that exemption, as long as you as a retailer didn't commit fraud, didn't solicit them to claim incorrect exemptions, you are covered. You are off the hook. It becomes the purchaser's responsibility. And again, I don't think any of you want any of your constituents based in Kansas to be responsible for knowing what our tax laws are up in Wisconsin. And if somebody in Wisconsin says, don't charge me tax, I'm exempt, and it's later determined they're not, you don't want them to come back to your constituent and say, you should have known better. But that's where just about every state was prior to implementation of Streamline and removing what we call the good faith provision, and making sure that, again, that retailers are protected in those situations. All right, one of the other things that we talk about with Streamline is a certified service provider program. And I think it's important to just kind of understand what these people do, how they do it. And so this is, again, very brief overview, but we're going to still try to touch on it. So how many of you know what a CSP is? How many of you have heard of a CSP before? Okay, so these are companies, they're under contract with the governing board, okay? They are companies that handle sellers, all of their sales and use tax responsibilities. For some of you that ran businesses, you may have outsourced your payroll years ago, right? I don't want to dealing with all the payroll requirements, knowing what the rates are, doing the withholding, filing all the returns, doing all those calculations. So you outsourced it to third parties. Our certified service providers are basically those types of third parties for sales tax. So sellers can outsource it to these third parties and have them take care of all of their sales and use tax responsibilities as far as from a collection and remittance standpoint. Now, when you look at what's required of the certified service providers, and these are not companies that just come in and say, yep, I'll do that, because I can tell you, we've had a number of people that have come to us and said, yep, we can do that, we want to do that for sellers, and we want to participate in the program, and as soon as we say, here's the requirements you have to meet, we never hear from them again. We are very, I'm going to say, we are very careful as far as who we do and who we do not approve as a certified service provider, because we are entering into a contract with them. Sellers are coming and registering through our organization, and then they're saying, I would like this CSP to take care of my tax calculations. We don't want some fly-by-night organization or entity to be able to do this and then make a bunch of mistakes and create a lot of liability for those sellers. So we have a very stringent process. They have to have a tax engine or a tax calculator that in effect integrates with their seller's order entry system. So that when an order gets entered into their system, it gets run through this tax calculator to determine what's the product, where is it sourced, so where is this transaction taking place, so they need all the delivery information, what's the applicable rate, is it taxable, all those things need to be done at the time the transactions take place. And our certified service providers have to demonstrate that, not to just a couple of us, but they have to demonstrate it individually to all 24 of our member states. If one state reviews their system and says they can't do it right, if Kansas says they can't do it right in Kansas, we will not certify them, we will not sign a contract with them. They have to prove that their system is capable of getting it right in all of the states. Now, how do they do that? Well, our states go through and review what they call their taxability rules. Diane talked about product categories. They have to go through and give us a complete list of all the product categories in their system, and they have to say, here's what the tax treatment is under each of the state's laws. Each state reviews that, and each state says, yes, we agree, or no, we don't. And many times, the CSPs will have categories that are very broad, and states will look at them and say, well, some of that might be taxable, some of that might be exempt. They won't certify it. They're going to make you go back, make that certified service provider break it into two categories so that they can say, yes, this whole category, if someone properly puts a product in this bucket, that would be exempt. And if they put it in this one, it would be taxable. I mean, that's the detail that your departments of revenue and all of our departments of revenue have to go through in analyzing these certified service provider systems. They also take a whole list of addresses, and you think about Kansas. You think about Kansas, and if you took one address from every one of your taxing jurisdictions, and you put it into what we call a test deck, basically list out, give the CSPs a whole list of addresses with a product and say, you know, it's a taxable product, tell me what the rate is you're going to return. They have to run that through their system and make sure they return the proper rate. State rate, local rate, and not just the rate, but which jurisdiction it goes to. Every one of those transactions comes back to the state to look at and say, did you get it right, yes or no? And again, if it's not right, they need to fix their systems. They have 10 days if we identify an issue to get their system fixed. So it's a very stringent process. So not only are they then processing all of the transactions on a daily basis for these sellers, at the end of the month, they're generating the return, they're filing the return, they're the ones that are actually sending the payments into all of the states. All that the seller does is gets a total from the certified service provider saying, here's all the tax that we collected for all the states and all the local jurisdictions combined. You need to send us X dollars, one lump sum, one electronic transfer. It's up to the CSP to be splitting that out and reporting it to each of the states and identifying each of the jurisdictions. Now, the sellers have the opportunity to go in and say, no, that's not right. There was an error the way you calculated, whatever the case may be. So they work with the CSPs if they run into those types of situations. So it's not just the CSP saying, send us 10 grand and we'll send it into the states. I mean, they're showing them every single transaction. I can tell you at the end of the year, we get a complete download of every transaction that a certified service provider processes for the sellers. And the state of Kansas gets every transaction that they process for the state of Kansas on anything that you allow them to get what we call CSP compensation. So when we talk about and get into the compensation, we talk about what the benefits are to sellers of this certified service provider program. If you have sellers that are calculating tax for Kansas, remitting tax to Kansas, but they have no physical presence here generally. They might have some minimal physical presence, which is okay. They can use those CSP services at no cost. And you say, no cost, somebody's got to pay for it, right? What we do in the contract that we have with the certified service providers is we allow them to keep a percentage of the tax that they actually calculate, collect, and remit to each of the states where these sellers have no physical presence. So that's the way that they are compensated. And again, our compensation rates are 2 to 5% of the tax. If they remit zero, it costs you zero. If they remit $1,000, it's going to cost you $50. You're going to get 950, and they're going to keep 50. That's how they are compensated. They're also going to take care of any of the audits that any of the states do for these sellers. So you have constituents that are selling all over the U.S. For any of the streamlined states that they are selling into, that they are using a certified service provider for, the CSP will handle that audit for them. The state does not contact that seller and say, we want to audit you. The state contacts the CSP. Now, there may be situations where the CSP has to go back to the seller and say, hey, we need more information about this transaction. But again, it goes back to, it becomes the CSP's liability. The only exception, if the seller lied to them when they were mapping products, improperly mapped products, things that the seller did incorrectly, those are things that the CSP then, with their contract between them and the seller, that they can return that, they can require that, that seller to pay them back for that portion of the assessment. Now, there are also benefits to the states by using the CSP program. Obviously, the one big thing is the upfront review of their tax rules. That means we can look at their tax rules and we can say, yes, their system is properly calculating tax. It's got the tax calculation correct. Now, when you look at this and you say, let's say one CSP has 10,000 clients. You could have 10,000 individual businesses that each one has to figure out what the taxability is. Or you can have one CSP that does it, and people just put their products into those categories. Diane mentioned soft drinks. Okay, I sell soft drinks, I drop it in the soft drink category. We know then that that taxability is correct for that state with respect to the soft drinks. So there are big benefits to the states as well as to the sellers with respect to the CSPs. So with that, let's move into local taxes, and probably your favorite topic right now.
So what we wanted to just touch on a little bit is how the states differ in terms of their tax structure, in terms of their reliance on taxes down to county levels, city levels, and sub-city levels versus states that may have taxes only at the state level. So in the streamlined agreement, there is no restriction on what you do. It's just that the tax base has to be the same at all the different levels. So when we look at some of the streamlined member states, a state like Michigan or Kentucky, that are streamlined member states, they have no local taxes. It is one flat rate. Both of them happen to be 6%. And then the state decides how to disperse those funds down to the various local levels. The state of Texas, which is not a streamlined member state, you can see that they are one of the ones that have a very large number of local jurisdictions. This is a map from 2020, so it is a little out of date, but they have over 1,600 jurisdictions, and your neighbor to the right, Missouri, is right up there at almost 1,500. Kansas is not at the lower end, it is at the higher end. So in 2020, there was 594 jurisdictions that exist in the state of Kansas. And so when we look at that, and I just want to get to, so that I can see the exact data I'm going to pull up. When we look at the data today, it's a little bit higher than that number. So there are 105 counties in the state of Kansas. Not all of them have a county level tax. I think there's about 94, 95 that have a county level tax. There are about 625 cities, I think, in the state. 328 cities have a city level sales tax, but where we've seen a real proliferation of taxes is at that sub-local level with your different special purpose districts. So there you have almost as many of those as you have cities. And so now Kansas is at about 715 different unique tax authorities across the state. So that adds some complexity. Now, what we did was we pulled a couple of examples from the Kansas document, the KS 1700, which lists all of the localities. And this is just a demonstration of what this file looks like. So those of you that maybe have never looked at this is what retailers have to look at to figure out the rates. Now, this is available digitally. This information is provided to those CSPs that Craig talked about, and they can incorporate it into their tax engines to have that. But if your constituents are sellers and they don't use anything like that, they either have to look this up manually, or they have to have some way to program it within their register. So here in Topeka, there is only one special purpose district, and that is the Wheatfield Village CID. So throughout all of Topeka, there's one rate other than on that specific, about a block on Fairlane Road, but only the odd addresses. Only the odd addresses. One side of the road, on a block, on one street, has a different rate. I can guarantee you that that is not a unique 5-digit zip code, so that just adds complexity here in the city of Topeka. The rest of the cities underneath that are one rate per city. We do have Vining is in 2 different counties, so there we've got a county line going through it, so I now have to know which side of the county line I'm on.
But I would add, when you're looking at that chart, when you look at it in your PowerPoint, every one of those jurisdiction codes in the left-hand column in the blue, sellers have to track their tax that they collect based on that number. So this is just one snapshot of out of, I think it was 1,700 lines there were.
Yeah.
They have to break it down in that level of detail, but it's needed so that your Department of Revenue knows who to distribute that tax to. So every time you add a local jurisdiction, you're adding lines to the same field or to the same chart.
And those have to be on the tax return, okay? But now let's look at Lawrence. I couldn't get all of Lawrence on one screenshot, okay? I have 3 of them out of, I think there's 8 special purpose districts in Lawrence, if I remember right. And you can see that they are sometimes one address, 4433 Bower Farm Drive. That one building is in that's the only one on that street. And then you can see there are some that are there. There are addresses that overlap and are in more than one special purpose district. So think of, because I don't think any of you represent Lawrence, if I remember right when I looked. Oh, you do. Okay, sorry. The rest of your constituents selling into Lawrence, can they easily figure out the rate that applies selling into here? And then if we go to my hometown in Kansas, where I grew up and where my parents live, this is Lenexa. It's even harder, okay? So they have many more. Here I was able to pull it out, but you can see that there's many that are just one specific address on one specific street that has a district. And then the other thing to point out, the very first one, for those of you that can see it, the Lenexa Central Green CID, has an address range on Penrose Lane, L-A-N-E spelled out, but only the odd addresses. And then when we go down to the Midas Dual Hotel CID, it is one address just past the group of that other range of addresses, but it is on Penrose LN. Do you guys remember playing Go Fish? Okay? The way the sales tax systems work, it's Go Fish. It is an exact match. So if the selling system puts in lane spelled out, it likely will not hit that specific address. Now, this is probably a Department of Revenue that they should do a little bit of standardization to make sure that they're using the same spelled out. Some of the tax systems have the ability to use abbreviations for things, whether it is Saint, ST, ST period, SAINT, all in caps, upper, lower, but not all of them. The CIPs would pick this, but if your constituent is using their own system, that likely would get missed. And that becomes a liability of the retailer. So that is just kind of things to think about with local taxes. So you do want to think about that uniformity, which Kansas has, so you're good on that. Where is it sourced? So when we're physically mailing stuff, that's easy to say. It's where the delivery address is. I'm shipping something to Lenexa. I have the specific address. I can look that up, and I can figure out what that rate is. But today, there is a lot that is sold that is not physically delivered. And so retailers may not actually have an address. And so now we have the challenge, and it is one that Streamlined has been working on. What do we do to identify where those digital goods are delivered and where are they sourced? Boundaries, this is where what I just showed you makes it very, very difficult on a retailer. Those minutia levels of boundaries are very, very difficult. In other countries around the world, there's usually one rate per country. They are completely overwhelmed when they see something like this, and it makes it harder, particularly for those foreign sellers, to comply. The burden is there. This increases the burden the harder your local taxes are, and then, the key thing that Kansas has is that central administration. The other thing that is a requirement of Streamlined is that local rates can only change on the first of the month of each calendar quarter with 60 days advance notice. So if you have a constituent that is trying to pass a local level tax and there's those restrictions, it's because of this requirement for the CSPs, well, first of all, for the Department of Revenue to get it updated, get it to the CSPs, allow the CSPs to test it and approve it, let the department know it's now right, and then get that notification out to all the retailers. The state can change with much less requirements around it, but at that local level, we were hoping that this might show you the complexity that retailers have to deal with. Remote or brick and mortar retailers may have been involved in voting a local rate change, so they're more aware of it, but those remote sellers are not.
Diane, I might just jump in here and say, this is one of the things that we were considering, as complex as we have this right now, we're just dealing with one rate. If you start adding products and this product is taxable at the full rate, this product is taxable at a different rate, it's almost exponential, the impact that it has on the complexity.
It is. In my home state of Illinois, so although I said I was kind of a Kansan, I've lived in Chicago for many years now. We had a reduced rate at the state level, and then local taxes on food, a reduced rate on food and medicine at the state level of 1% instead of 6.25%, and then up to a 2% local tax at the local level. We eliminated the state level tax, but the locals had the ability to reenact local taxes if they wanted to. And each locality has to reenact independently with certain notice to the Department of Revenue. I live in Chicago, the biggest city in Illinois. We did not reenact. So now I'm good. My food rate was 2.25. It's now 0, kind of like that. But it adds complexity because each different city, now they have a common definition, they have to follow the same base, but each city every quarter that didn't enact it in time for the first rollout can still enact it. So it is this rolling potential change depending upon if the city needs revenue or not. And there's a lot of political decisions about what are we doing and how are we dealing with that. Yeah.
Just one other thing to think about too. Prior to the Wayfair decision, when you were making these types of decisions, you were affecting your own in-state brick and mortar physical presence retailers. Now when you're making this type of a decision, you're impacting every retailer that sells whatever that product is into your state, plus your own brick and mortar stores. And if you think about it from the perspective of all the legislators around the country, and if you say, well, this is just one city in Kansas that wants to do this, it's not that big a deal. Now take it times 45 states with a sales tax and assume every one of them picks a city, but then they pick a different product. We don't want to do it on food. We want to help our people that are selling computers. We want to do ours that helps clothing. Those are where that complexity comes in. So now that retailer, as Diane indicated, whoever the most granular is, that's what every retailer around the country needs to bring their system down to. They have to have that level of granularity. And that's where I think you're saying it's exponential. That's exactly right. I mean, it just gets bigger and bigger and bigger really fast if you start allowing those sorts of things to be happening. And that's why we've resisted them. I mean, that's why I will tell you, you know, Diane mentioned there's one rate in a country. Early on in the days of Streamline, if I don't know if any of you were watching this, we were talking about, and the business community really was pushing one rate per state. And that's where we worked very closely with the local communities, and we all came to the agreement. It's like one rate per state. We can't argue that that would make it simple. That argument's not there, because it clearly would. But so many things, especially now, are pushed down to the local level. Things that, for funding and different things like that, they need that ability to be able to impose a tax. So as long as they're doing things on a, and we'll talk about kind of what the ideal local sales tax is, but as long as they're willing to piggyback, in effect, your state sales tax, it doesn't make it as difficult, and we can take care of that, I think, in most cases with technology.
And one of the things that is at a risk in not every state, but in some states, is it's not just the Department of Revenue that retailers need to answer to. It is everyday consumers. So in some states, Illinois, New York, Florida, and others, class action lawsuits where if I, as a retailer, overcharge by 1 penny, I can be sued under a class action lawsuit that will turn into millions of dollars. Treble the amount to be paid to the whistleblower that turns them in. If I undercharge by 1 penny, that same person can come in and say, I'm defrauding the state of funds, and do the same thing. I have helped businesses that have been victims of that. Luckily, they have settled, but it hasn't been for zero, but it has reduced the cost. The Departments of Revenue require retailers to be 100% perfect on every transaction. That is an unreasonable expectation. And that is something that we keep in the back of our mind, and we would ask all of you to keep in the back of your mind as you build things in for the complexity. I don't think Kansas is one of the states that allows these types of lawsuits for tax matters. I would please tell you, please don't ever allow that to come in. There are times when that is right, but miscalculation of sales tax is not one of them. And I think then because I think we've talked about some of those other things. So Craig, you want to talk about what's ideal?
Yeah, so if we look at local sales tax, again, and we're not here to say don't pass local sales tax. That's not at all what we're here to say, or not to expand it. But if you're going to allow additional districts dealing with local sales taxes, for example, because that's really what we're seeing the biggest, I'm going to say, expansion in, and not just Kansas, other states as well. Make sure that that local tax is going to piggyback your state sales tax. What's taxable at state level, taxable at the local level, exempt at the state level, exempt at the local level. That is extremely important. Now, again, you can have a different rate within that jurisdiction. So whatever that jurisdiction, whatever those jurisdiction lines are, that rate needs to be exactly the same on all the products within that specific jurisdiction. And when I say it has to be exactly the same, it doesn't mean that there can't be exemptions. So you're going to have some things that are zero, right? But it's because there's an exemption that's in place that a purchaser is claiming to bring that tax rate down to zero, not that you're carving out a specific product and saying, for this thing, we're going to make it $0. So make sure that it piggybacks. Ideally, again, if your boundaries followed a 5-digit zip code, that's the perfect world. The reality is, I don't know that that's going to ever happen. In fact, you know, we know in my state of Wisconsin, we know that 5-digit zip codes cross county lines, and we only have a county level tax 40% of the time. So we know that it's unlikely that that's going to happen. So that's why we then also require states to put together a boundary database that uses a 9-digit zip code. So if you've got a seller's address, you can normalize it through the USPS system. You can do that online. You can get a 9-digit zip code. And those 9-digit zip codes, basically they're postal mailing routes. They weren't put in place for tax purposes, but that's really what we've been using them for. And those are much closer to the jurisdictional lines for your municipalities and for your counties. So that's another option. say the worst case, but probably the most needed at this point in time is because of the granularity is the street address. But as we showed with the database that's out there, if you don't normalize or standardize, and if a business doesn't normalize and standardize everything exactly the same, these are computers trying to talk to each other, you're not going to get a match. So you're not going to match on the address, which means under the streamline rules, you will then apply whatever the rate is for that 9-digit zip code. If you can't match that 9-digit zip code, then you're going to apply the 5. And the way the agreement was written, you have to put in the database the lowest combined state and local rate that falls at any point in that 5-digit zip code or in that 9-digit zip code. So if there's one spot that has no local tax, that means that's going to be a 0 for the locals. What we just did, and Diane mentioned that we've been working on this at Streamline because the amount of digital products and products that are transferred electronically is growing significantly. And purchasers do not want to give more information than they absolutely need to. They don't want to give their full street address and everything else. They want to give whatever the minimum amount of information is for them to be able to get that product in their hands. And when you're buying something online, you're buying it digitally, what usually do they provide? You put in your name, you put in your credit card number, and you put in what? A 5-digit billing zip code, right? To confirm that that's really your card. Those are the things that you usually put in. Well, that 5-digit zip code, a seller can't figure out what your address is from that. So what we did is we revised the agreement. Instead of requiring states to go to the lowest, and this is where we worked with our locals on this, we now allow the states to say you can either require the sellers to collect the lowest, the highest, or any rate in between. But you have to put that in your database. Now, I think Kansas law, if I remember correctly, along with the majority of the streamlined states law, all still has lowest in there. So if you want to change that, you can, but you're probably going to have to go in and change your statute to allow something other than the lowest rate. But again, the 5-digit zip code is the ideal. And that last statement, the simpler the tax is, the more likely it is that people are going to be voluntarily complying. I mean, businesses, my experience has been in the role that I sit in, businesses are trying to comply. Are there some bad actors out there? Absolutely. But the 99% that are out there and that are trying to do everything right, they're working at it. And if you give them the right answers, they're going to use those answers when they're calculating and collecting and remitting their taxes. Now, I just want to touch briefly on this House Bill 2456, and my understanding is, and correct me if I'm wrong, I think that is no longer pending. Is that fair?
Yes, that would be an accurate assessment of that.
Okay, and I don't know all the backstory on it, but that's fine. But you know, when we see things like this, one of the things that Streamline does is we look at it and say, are there any concerns? Our Business Advisory Council is also watching for these types of bills. And they're reaching out and saying, hey, have you seen this bill in Kansas? Did you see what they're trying to do? This wouldn't be, it wouldn't be in compliance with Streamline, so we obviously want to identify that and try to work with the legislator that's involved immediately if we can to try to get it fixed. But for a bill like this, if something like this had passed, just to give you an idea on the complexity of what would have happened, if this gets passed, so it would have been just Wichita, if I'm correct, that would have not had a sales tax on, would it be?
Yeah, Representative Hoheisel.
Thank you, Mr. Chair. It was because of a Wichita sales tax election, but it would allow any county or city that levied a sales tax to opt out. So it would allow any of them, but it came up because of the Wichita sales tax vote.
Okay, thank you for that. But if that would have happened, when a seller had a transaction, the first thing they would have to do is source it. They're gonna have to figure out where is it. Okay, so they're gonna say, okay, yep, this one's in Wichita. Then they go in and look at it and say, okay, what is the product being sold? Because they're going to have to figure out, is this a food item or is it not a food item? And again, this could be any product depending on what states did. Then does that particular jurisdiction carve out and treat food products differently than the rest? And they would have to do this not just for some transactions, but the way their systems are programmed, they'd have to do it for every transaction. Every transaction that goes through their system is going to have to go through that process. Do they treat this differently? Because as soon as we go down, and I'll call it the slippery slope of carving out one type of product, we're going to get others who are going to say, okay, now we want to do this product. And eventually, you're going to continue to see those carve-outs that are there. And that's really the concern. The databases that the Departments of Revenue put together, they're going to grow significantly. And think about, even if the computers can do this, how many of the constituents that you have can afford to hire those types of companies if they have a physical presence in Kansas, so they're not going to get the free CSP services, to pay them to be able to do those calculations to get it correct? And that's really what I look at from from the role I sit in is, are we making sure that this is going to be easy enough for, again, not just the big guys, but the little guys as well to be able to comply? And I think that's an extremely important piece.
Representative Hoheisel.
Thank you, Mr. Chair, and I know the hour is getting late, but just one quick question I had on this is how does that come in with CID districts? So districts within in Wichita, we've got, I mean, a number of CID districts that charge up to a 2% additional sales tax. So how does this, I guess, layer on to that?
So if you took take the CID district, so again, you've got a distinct boundary for that, right? But everything within that boundary, if there is a CID rate, that applies. Now, that may overlay with a county, right? And that's going to be listed separately in the rate and boundary database. So it's still taking it and saying, here's the jurisdiction, or here's the address, or here's the zip code, or the 9-digit, whichever it needs. And then it looks at the database and says, here's the rates that apply. But if you break out by type of product, then it says, okay, if it's a general product, whatever that may be, this is the rate. But then now we got to go back up and look and see, do they do anything special with any other types of products? So they have to try to, in effect, then go out and say, okay, this was a food product, this wasn't a food product, and then if it is, then we apply this other rate and we drop off the general rate. Does that make sense? Okay. Yeah.
And I think when I looked at the bill, I think it was only cities and counties that could elect out. So if the city of Wichita elected out, but Sedgwick County, I think I'm remembering that right, it's the right county, Sedgwick County did not, then a retailer in Sedgwick County selling into Wichita would collect the county tax and the CID if the address is in a CID on food, but not the city. And if they are outside the city limits, then obviously the city tax doesn't apply, but still the county and the CID would. If it was the county that opted out, but the city stayed in, then you can see that you've got these different variations and complicated by, if there's, which I think there are multiple CIDs in Wichita, that then you've got all of these different combinations of things that a retailer has to follow. And let's just take it somebody that's outside of the city limits of Wichita, but they're in Sedgwick County. They now need to know that, okay, if I'm in the city limits, I can't charge the same rate that I'm charging on everything else. So they're selling things, one of the things, we often talk about is cheese boards or fruit baskets, right? The cheese board is taxable, would not qualify for the food rate. The cheese would. So now on the same invoice, I've got two different things that are going to be taxed at two different rates. So that's where that complexity just kind of explodes.
And Mr. Chair, if I can follow up, yeah, and we kind of have that same issue now with when here in Kansas, when we got rid of the food sales tax, but we still allow the county food sales tax. So we've had issues in Wichita, especially when we initially rolled this out, where people will look at their receipts and see a 1% local or county food sales tax and say, what is this? I thought we exempted, or I guess drove down the rate to 0 on the food sales tax. But I'm looking at when we figured it out with that. And so I think there is a world where we can make this work and give the locals the option. I'm not sure many locals will do this. It's not needed in Wichita because the vote yes people got 18% of the vote and the vote no got 82%. So it's not needed now for this. But I do think it warrants further discussion in the future. So thank you guys for being here. Thank you, Mr. Chairman.
And I think if I can just make one final comment on it, the fact that it was, and Craig will probably tell me it still is an issue, but not as big of an issue. If it's no county tax, no city tax, then that's fine, right? If we make it exempt from all levels of tax, they can do that without a problem. It's the fact that it's each city or county can separately elect, that's what messes with the simplicity requirements of Streamline. So it's because it's all over the place that it can opt in and opt out, that's what makes it more complex.
Yeah, no, and when I was talking to the chair about this concept earlier in session, even before session, one thought that popped in my head is we just passed one to exempt it do it ourselves and say, on a local level, it's zero rate, just like we did on the state level. But we know that many communities rely on that sales tax revenue, and they would push back, extremely hard. That's why the option's in there, the option piece was in there, so, thank you.
Okay, so I know we're running a little bit over, imagine that, huh? Representative Smith. So one of the things, Diane, I think we do want to talk about, though, is there's still the possibility of some federal action on this issue. On the whole remote sales tax collection, we made great strides with what we've developed in the Streamlined Sales and Use Tax Agreement, with what we've developed and what we got through the Wayfair decision. But I think we need to be careful, and again, I've said this a few times, it's something I am always looking at as we are making changes to the agreement, as states are looking at making changes to their laws. Are they moving away from what the laws were, what the agreement was, what the requirements were at the time the Wayfair decision was issued? And if it is anybody going to care? Well, I think the answer to that question is absolutely. Diane and I I don't know if it's a privilege or a curse, have testified twice on Capitol Hill, once for the Senate Finance Committee and another time for one of their subcommittees, specifically talking about remote sales tax collection authority. I'll tell you the first time that we testified back in 2022, it was because the legislators and the members of Congress at that time, or at least a number of them, because keep in mind, you have 5 states with no sales tax. And they're saying, this is way too difficult for our constituents. They don't know anything about sales tax. Well, truth be told, I looked at our registration system. We have sellers registered from absolutely every state in Streamline, whether they have a sales tax or not. So they are familiar, obviously, with sales tax. But they were only focused in that particular hearing, they were focused on the complexities that it created for businesses. They weren't necessarily, and I think it's fair to say, they weren't necessarily looking for solutions. They were looking for reasons to say, we need to go back in and consider legislation that would in effect reverse the effect of the Wayfair decision, which in turn would take away the collection authority on remote sellers that states gained in Wayfair. Now, if you think about that and you think about what would have happened, that little thing that we had that started in March of 2020, little thing called the pandemic, and all of a sudden people were not going into stores, everything was being ordered online. We were concerned, from a Streamline perspective, we were thinking, what are states going to do from a revenue perspective? But because of the Wayfair decision, we knew that there were sellers that are out there who were going to have to collect and remit the tax, even if they were remote sellers. But had that not been there, again, think about what position your states would have been in. So Streamline has taken a position that we are pushing back on any congressional action that is trying to do anything as far as restricting the state's rights with respect to remote sales tax collection authority. And that's the way that we have testified at these hearings as well. We quite frankly believe that our member states are in a good position. We think you've implemented the remote seller collection authority in a reasonable manner. We can't speak for non-streamlined states, obviously, and I think that's what gets a lot of the attention. But again, we know that Congress is still watching what we're doing. So this happened in 2022. Then it happened again and the Government Accountability Office did issue a report, and this is just the cover page from that report if you want to take a look at that, as far as making some suggestions on things that the states and Congress should consider. And interestingly enough, they had a really hard time using the word streamlined or streamlined sales tax in their report. But what they're describing in here is states working together with the business community. Sounds a lot like streamline. Those are things that we've already done, but they were making that as part of the recommendation in their Government Accountability Office report. Then we got called into the second hearing in 2024, so this isn't that long ago, and they were still looking at the same types of issues. But I think at that hearing, I want to say that the tenure was a little bit different. I think that some members of Congress, including Congress and representatives from non-sales tax states, Senator Hassan specifically from New Hampshire, she started to realize that what Streamline has done, it does remove those burdens. It does help retailers be able to comply. The CSP program is there. But again, we got 24 out of the 46 states that have, and DC, that have a sales and use tax. So there's still 22 states out there that don't do anything. And should they be required to do things before they can get remote seller collection authority? There was some election that took place, and the parties switched places. And so now this issue has kind of been quiet lately. We're hopeful, I'm hopeful that it kind of stays that way. And again, our member states continue to show that they can do this. They can implement this in a reasonable and fair manner. So, but I think it's important to remember and not to lose sight of the fact that A, the Supreme Court did not give us an answer on what constitutes an undue burden on interstate commerce. And B, Congress is watching. And Congress has the ability through the Commerce Clause to regulate this. And you know, as long as I'm sitting in this role, I will do everything that I can to prevent Congress from doing anything like stripping away any of the powers that the states have with respect to remote seller collection authority. Do you have anything you want to add on that?
Not really. I think just the thing to keep in mind is keep in mind your constituents. They are selling into other cities within Kansas, and they are also selling into other states. And then keep in mind all of these other sellers selling into Kansas, you want to make it so that they can comply. We represent in my firm a lot of small businesses, a lot of e-commerce, and they come to me sometimes in tears. I had no idea I was subject to this. When Wayfair first came out, what the business community, not the tax community like us, the business community thought it only applied if they were selling online, they had an online store, and they were selling to individual consumers. Things like you might buy from Amazon. They did not realize business-to-business transactions. They did not realize if I sell services and those services are taxable in the state. They didn't realize that digital goods might be taxable in different states. We still, to this day, have companies coming to us saying, I had no idea. And now they're looking at liability going back to 2018. We've got a seller that is one of our clients that is based outside the US, in a US territory, that their liability was tens of millions of dollars across the states. Tens of millions of dollars. It will put them out of business. That is not what any of us want. So we really want to work to make sure that we can get these companies in, get them compliant, get them cleaned up without putting them out of business. And that's really from the business community what we look for, is how can we get more companies compliant, more companies collecting your Kansas sales tax, but keep them in business. Thank you.
All right, thank you. And again, we're glad to answer any questions. As you can tell, we're both a little bit passionate about this, and we would talk about this all day and night if we could.
Yeah, I'm not sure what the tolerance of that would be, but we would be happy to, you know, I'll just make a comment. When I was a brand new legislator, I had no idea what Streamline was. And I thought it was something that primarily benefited the state and our collections. And the more I learn about it, it's more of an advantage for our businesses. The simplification and the ease and the litigation that they can avoid, it's critical that our state stay a member, stay in compliance for our business community. I mean, it's important from the state level too, but also our business community. But committee, are there any questions?
And if I can add to that, Mr. Chairman, I mean, it also does, and again, because of my background with the Department of Revenue, you know, what I would add to that is it also makes it a lot easier for the department to be able to administer fairly and equitably for all sellers by having everything as uniform as we possibly can.
All right, seeing no further questions. Thank you again for your time and trip down to Kansas, and go Cats.
There's always a chance in the tournament.
There's always a chance, yeah. That's a good K-State saying. All right, committee, we do have a couple of bills I wanted to take your temperature on. The first one was House Bill 2496. That was expanding the income tax credit for qualified railroad track maintenance. I might have the revisor just give us a quick overview on that.
Thank you, Mr. Chairman. House Bill 2469 would expand the income tax credit for qualified railroad track maintenance expenditures. This is the credit that currently exists to include credits against premium taxes, privilege fees, and privilege taxes. The bill would also allow for the transfer of unused credits to any individual or entity subject to such taxes. And with that, I'd be happy to stand for any questions.
Okay, so this is not just a simple renewal. This does expand the transferability, correct? Okay. Committee, any questions for the revisor on the bill? If not, is there any discussion on the bill? Oh, Representative Smith?
You know, we're big in railroads in Crawford County, so it's something, it'd really be good for Crawford County. And several years ago, I don't know, 10 years ago, when Secretary King was Secretary of Transportation, he would say the railroad saved the state millions of dollars by, you know, not tearing up the roads, by railing stuff. And the only way they can do that is by fixing the tracks that they have. So thank you, Mr. Chair.
Representative Sawyer?
I move we pass the bill up favorably.
Okay, got a motion and a second. Is there any further discussion? Representative Kahar?
Could you remind us of the cost to the state, please?
Might turn to staff for the fiscal note on that.
The fiscal note prepared by the Division of the Budget on the bill indicates that the bill would have no fiscal effect on the state.
Representative Awerkamp?
Thank you, Mr. Chairman. So I think as a bill we saw a few days ago, the fiscal note, it doesn't really make sense. So we have to read between the lines there. Why are they asking for transferability, and why are they asking to extend it? Right? It's going to extend the cost of the state, and then transferability increases the cost of the state. They wouldn't ask for transferability if they could use them, would be my guess. But I think this whole concept of tax credits is essentially subsidy to business. These businesses, they operate with a profit. They have their business plan. Every business in Kansas is important. We need to get away from these tax credits, in my opinion, and let's just treat businesses equally. And it's just not good policy. We're picking and choosing. Basically, whoever can hire the biggest lobbyist wins. It's just a bad message to be sending to the business in Kansas. People are sick and tired of this process to where the lobbyists come in, they ask for a carve out, and we give it to them. We have to say no at some point in time. Where do we stop? At what business isn't important? What business couldn't come before the legislature and say, look what I do, I'm special, give me a tax break? Every single business could do this, but we're not going to give it to every business. I think we just say no, and now's a good time to start. Thank you, Mr. Chairman.
Representative Long?
Thank you, Mr. Chairman. I understand the reasoning behind previous representatives' comments. I will say that this bill does reflect a railroad in my district, and to talk just a little bit about my district, I would say that we have maybe a higher degree of truck traffic, meaning grain and fat cattle coming in, fat cattle coming out, grain. Truck traffic is really big in my district. We also use the railroads and depend on the railroads. If we didn't have the railroad also transporting grain, also transporting carbon black in and out of our area, I think like another previous representative said, our truck traffic, our highways would be, the maintenance on those would be twice what they are today. So this is certainly important for my district, and I would say the western half of Kansas that's got railroad traffic for ag purposes. Thank you.
Representative Francis.
Thank you, Mr. Chairman. And I would just echo what the previous representative said. And also one of the things that this does is take traffic off of some of our local roads. But to address the deal about the transferability, this tax credit is currently transferable. It just broadens the number of people that can benefit from the transferability, and it makes the tax credit more effective because it's more marketable. It doesn't make it transferable. That's what I'm saying. It just expands the market of the people that can purchase the tax credit.
Yes, thank you for that correction. I think I misstated that when I didn't mean to imply that it wasn't transferable earlier, so that was my mistake. Representative Turner?
Thank you, Mr. Chair. Yeah, as I look at the fiscal note, it says it has a statutory cap to award only $8,720,000 in credits per tax year. So the reason this wouldn't have a fiscal note, much like the earlier credit that was alluded to, is because Department of Revenue, when they issue these credits, is when they count the amount of credit that is extended, right? Under the previous rule, which under this bill would be, take away the restrictions basically and allow them to be transferred to any individual entity is what it says in the fiscal note. So the reason there's no fiscal note on these kind of things is because when they issue the credits, that's when they're valued. That's when you get a fiscal note. So when you just liberalize the rules by which those credits can float around and be used and sold and transferred, it doesn't result in any more credits out in the world. It just means more credits will be claimed against their state tax by anyone and everyone, and therefore that's when these things really hit the bottom line of the state, is when they are claimed against a tax liability, and therefore we don't collect those taxes. So that's what I would say about that. There is a fiscal impact. It's because more of these credits will be claimed that are out there. So thank you, Mr. Chairman.
Representative Abercamp?
Thank you, Mr. Chairman. So just going back onto the transferability, the current law says that they're transferable to any eligible customer or eligible vendor. And then the bill as written would extend that to pretty much anybody. And you go back, how do these things, it's kind of what do they call it, the camel's nose under the tent, right? They start with just a tax credit just for the business asking for the incentive. And then it grows into probably what this one did. Oh, well, we'll just do it for our customers and our vendors. And then it keeps growing and growing and growing to the point where in recent years we've passed refundable tax credits. It starts getting out of hand. And all these are carve-outs for specific industries that are typically very large. They don't need this help to do, they're going to do the work. They're going to do the work. This is just gravy on top of it all. And as much as I love all these businesses, well, we need to treat them all equally. This is just another carve-out. I don't think it's good policy. Thank you, Mr.
Any further discussion? Representative Turner?
Oh, I thought we had somebody here. Thank you, Mr. Chair. What I would say is, the conversation shifts to whether it's worthwhile to issue these for the purposes of railroads, but the fact is that they were issued based on the rules at the time that they were issued, and now that they're out there, then they're saying, oh, well, we want more flexibility to move these things around, sell them, monetize them, shift them, transfer them. So it's not whether the underlying purpose is worthwhile. That's already been established. The rules were written, the credits were issued. This is about the credits that are floating around. So thank you.
All right, seeing no further discussion, all those in favor of the motion by Representative Sawyer to pass out favorably, say aye. Aye. Opposed, no? No. The ayes appear to have it. The ayes do have it. Motion carries. Next item was House Bill 2599, and I'll again turn to the advisor for a brief overview on that, please.
Thank you, Mr. Chairman. House Bill 2599 would exempt from sales tax the first $10,000 of tangible personal property sold by a minor-owned business in each calendar year. Additionally, the bill would prohibit any city, county, or township from levying or imposing a tax or fee to require a license, permit, or other government permission for the operation of the minor-owned business. An additional part of the bill, the operation of a website, online marketplace, listing, or other digital storefront by the minor-owned business shall be considered intermittent or seasonal to qualify under the bill.
Committee, are there any questions for the reviser on the bill? Representative Long?
Thank you, Mr. Chairman. During the hearing the other day, this didn't come up, I don't think, but I should have asked the reviser. So if a kid's going to take something to farmer's market or something like that, a lot of times cities and counties charge a fee for vendors at a farmer's market or a food truck, and they're selling, you know, cupcakes over here. This bill keeps them from paying those local city and county fees too, right? Is that how could you read that part again?
If there's a fee to participate in the farmer's market, I don't think it excludes that. I think the way I read the bill, and if the reviser wants to correct me, but if there's a business registration fee that is imposed by the city or the locality, it would exempt them from that. But if there's just a vendor fee, I don't think that would they would be exempt from that.
I would agree. There might be a little bit of gray area where it's unclear. You know, if it's a fee to be on a premise versus to operate the business on a premise, that would conceivably probably be allowed. But to get a fee or to get a license would definitely be prohibited.
I wonder if the committee would accept a conceptual amendment to exclude any city or county fees associated with the sale of minors.
Well, I think the bill does that, but if you have an organized farmer's market,
okay.
Representative Howerton looks like she wants to answer that.
I think maybe we said something like event fees or something to exclude those. Or I'm not exclude those, but those could be included. But if you called them event fees?
Yeah, I'm not sure if they call it a vendor fee or an event fee, a
Vendor,
booth
yeah,
fee,
vendor, yeah,
things
something.
like that.
That's what you're talking about, I believe. Okay.
Yeah. Representative Francis?
I should probably sometimes pay more attention to what's going on here, but like the farmer's market in our town, it's not ran by the city, it's ran by a nonprofit organization. I mean, I don't think we ought to confuse the issue with something like that.
Representative Corbett?
I kind of agree with the representative down at the other end. I think city and county is pretty clear. You don't want to get into private people who are setting up, you know, fairs and whatever. That's kind of stepping on toes or doing business also. But city and county seems pretty fair. And if it's already in there, that's great.
Okay. Representative Howerton?
Sorry, just to clarify, I think they should pay the vendor fees in the event fees, but not what the bill, I think, is talking about. So
Right, and I think
just to clarify that, yes.
I think that's still generally the intent of the legislation, is to still allow those vendor fees.
Is that what the revisor said was unclear? Is that what we're trying to clarify?
Would you restate that?
What are we trying to clarify? What was unclear? He said something was unclear.
If it's a city fee to register the business or license the business, that is exempt. That's prohibited. If it's a fee, just a vendor fee to set up your booth at this location, if there's an organized event, somebody's organizing that, and in order to generate some revenue for hosting that event, they charge a fee. That is still allowed, I believe, under the current legislation. So Any further discussion? Representative Sawyer.
I move we pass the bill out favorably.
Second from Representative Hoheisel. See no further discussion. All those in favor say aye. Aye. Opposed, no. Motion carries. All right, that concludes our business for the day. Thank you very much, committee. We're adjourned.